In this presentation, we will work a problem related to posting revenue, related to posting allowance for uncollectible accounts, the interplay between the current and delinquent receivables, as well as the account for the deferred inflows of resources. We're going to have the information on the left side. We're going to put that information into the blue area to work our problem. We've got the general journal, and then we're going to post that to our worksheet, which will have a trial balance, a beginning and ending trial balance. This will give us some context as we put this information into something that is in balance. We can see the relationship of these accounts, assets in green, liabilities in orange, the light blue being equal to the equity section or the fund balance section for governmental accounting, asset minus liability section, the temporary accounts being equal to the income statement accounts for if it was a for-profit, temporary accounts in the governmental accounts, but they will or could include budgetary accounts as well as the encumbrances accounts. All right, here's going to be our information. We're going to say that first we have the property taxes were levied at the $4,703,000. 3% is uncollectible. This, of course, is revenue to the government agency who's collecting the taxes. So we're going to say that they have a receivable. It's going to be current because they just levied people, so they give them a little bit of time before they're delinquent on the taxes that they just levied, and they're going to have a receivable of the $4,703,000. Now we expect that some people won't pay because that's just the nature of things. So we're going to say that 3% of those are going to be uncollectible. So we're going to record that into the allowance. In a similar fashion as we would if it was a for-profit type of organization. We're trying to estimate how much of these receivables we have that are going to be uncollectible as we make the assessment here. So we're going to say this is going to be negative. I'm going to say negative of this number times 3%. So 3% uncollectible. Then the difference then is what we're going to call our revenue account. Negative sum of these items. So the credits then adding up to the debits, this is going to be our revenue account. So let's post this out then. What happens is we're going to have the taxes current in K4. I'm just going to post this to the center column. So here's our current receivables going up. And then I'm going to post the allowance. We're going to say there's an allowance. That's going to be the second item. The credit. So the net we expect to collect is the difference between the two. This is a contra asset account. And then we've got our revenue down below. Revenue is going to be increasing by the difference between the two. That's what we expect to receive. And of course, in our balances down here, this is going to be an actual revenue account. We're not using the budgetary accounts here. We didn't post any budgetary activity, but I just want to show those so you could see where they would be here. So estimated revenues, appropriations, expenditures. We're focusing here in this problem on the revenue accounts, and of course the debits and credits are still in balance as we go. Okay, next item that we're going to have is say that we collected this much amount. So we're going to collect it, and that means we got cash. And anytime we get cash, we're like, whoo, that's good. At least I know something in governmental accounting, right? Because cash is pretty easy. It's going to go up or down. Cash went up. All right, that is what it is. That's tough to mess that up, So we're going to say cash is going to increase. And then what's the other side going to go to? Well, it's what we would expect it to go to in this case. It's going to be the receivable, just like it would be in normal accounting, right? We got an increase in the receivable for, it would be for work we did. In this case, we just levied people and said they owe us money. And now we got the money. So now we're going to take that down. So we already recorded the revenue. This would be similar to like normal accrual accounting. So we're just going to say this is now the taxes. And now we could post this out. So we're going to say posting the cash up top in K3 equals, and that's going to be the debit. Other side is the taxes. So here it is here. We're going to be in this account. I'm going to double click on it, go to the end of it, plus, and then point to this credit, bringing this amount down, putting us back in balance down below. So there we have that. Next item is going to be, that was number 2, by the way. Now we're on number 3. And number 3, we collected delinquent taxes of $55,500. and interest and penalties of 5,300. So again, we could kind of say, well, this is still pretty good. At least I can get part of this because we collected. That means we got cash. And again, you can't mess that up. We debit cash. Cash is going up. So that is what it is. So at least we know that. And we got cash for both of these amounts. So the 55.5 and the 5.3 add up to 60,800. Now the question is, well, what's the other side that we're going to go to here? Now, if you have the chart of accounts, obviously this is a lot easier because we could say, you know, if people owed us money for taxes that we assessed in the past, you would think it would be some type of receivable, which it is, but it wouldn't be current because it's delinquent. So whenever the current receivables became delinquent, we must have moved them into delinquent receivables. So within delinquent receivables, you would think this would be the going down. It's a receivable account that we have classified as delinquent past due. So I'm going to take the delinquent account down by saying this equals the delinquent, taxes receivable delinquent. That's going to be a credit, but only for that 55.5. And the difference is going to be interest and penalties. I'm going to use the plug formula to record this negative sum of these items. And that's going to be the 5.3, or that's given in our problem. That's what we needed in order for the credits to add up to the debits. So now we got to think, well, that's going to be some type of income for us. Now, we could, if we have a trial balance, we could say, have we already recorded that income? And we could see, is there any kind of receivable related to interest and penalties? We do have a receivable here. So that would mean that we already calculated the interest and penalties. We recorded the receivable, and therefore we now need to reduce the receivable of interest and penalties. If we had not done so, you would think it would be revenue for the interest and penalties. So we're going to reduce the receivable. This equals the interest and penalties receivable. And now let's record this. So we'll go up top, recording the cash first. So we're in the center column in cash. Something's in it. Going to double click on it, go to the end of it, plus, and then point to that 60,800, increasing the cash, putting us out of balance down below. And then we're in the taxes receivable delinquent. That's going to be here. It's a debit balance. We're going to go into the middle column, equals, and we're going to go to the credit, the 55.5, bringing it down to the 44.5. And then we've got the interest and penalties receivable. That's going to be here. We're going to be in the middle column in column K. This is equal to the 5,300, bringing the 40,000 down, putting us back in balance down below. Now, the next thing that we need to take care of is the fact that we got paid for something that happened in the prior time period. And when that's the case, we got to look and see if this was posted to deferred inflows of resources. Now, this is something that's going to be new or different than accrual type of accounting. So we don't expect to see this deferred inflows of resources. It's a little bit unusual. Why is it there? What happens? Well, notice that if we didn't get paid this amount in the prior period, we may have recorded it, we would have, under an accrual basis, recorded it in revenue. And basically the modified accrual is saying we want to not record it in revenue, so we're going to reverse it out of revenue, and then we need to put the other side somewhere, which is going to be in this deferred inflow of resources. We'll see this as we go along with this problem, towards the end of this problem, when we have to do this adjustment at the end. So bear with us, it'll probably make more sense at the end of that period. So this was an adjustment then that was made at the end of the prior period in order to reduce the revenue for revenue that we would have recorded on an accrual basis, but because it was delinquent, we don't want to record the revenue in that time period, so we reduced the revenue by the amount that wasn't paid, and then we put the other side to the deferred inflow of resources. Again, we'll see that process as we get to the end of this problem. So just note, anytime you're dealing with basically receivables for prior period tax revenue for the delinquents taxes, then you got to figure, okay, am I going to have to deal with this deferred inflows of resources? You got to do what we would expect to do, this under a normal accrual accounting that we would apply to governmental accounting, and then we got to say, is there an added transaction we need to deal with regards to the deferred inflow of resources? In this case, there is. So we got to reverse this out as well. So I'm going to say that we're just going to reverse this. This is going to be equal to the 60,008. and I'm going to put the credit on the other side, and we're going to now record the revenue. So note what we're basically doing is we're increasing the revenue at the point in time that we got the cash. So it's the modified accrual accounting. We are, in essence, in this case, recording the revenue basically when we received it. So you'll note up top, this journal entry recorded the revenue on an accrual basis, and then we're going to have to basically reverse that, anything that's non-accrual on the revenue side, by using this deferred inflow of resources. We'll see that this transaction is reversing last period's adjusting entry that lowered the revenue, now recording the revenue on a cash basis in the current time period. Hope that makes a little bit more sense. So now we're going to go and record this. Here's this item. We're in the deferred inflow of resources. So in K11, this equals the 60,008, bringing the liability down to 0. Then we'll be in the revenues. Something's in it. So I'm going to double click on it, go to the end, plus the 60,800, increasing this amount, bringing us back in balance down below. Okay, so now we're going to go to number 5. It says we have uncollectible taxes, interest, and penalties are reclassified. So all the uncollected taxes, which is going to be up top. Notice up top we have these current taxes, our current receivables. This has what hasn't been collected yet. And we're going to say it's going to be reclassified to what? Well, now delinquent. We're going to say this is delinquent now. So in essence, we need to take these balances here, and we got to move them down from the current taxes and allowances to the delinquent taxes and allowances. Now note, this is a lot easier to do if you actually post this to a trial balance, because we could see what the balances is now. If you're working a problem that doesn't have a trial balance, you're going to have to use T accounts and basically do the same thing that we're doing here to record these transactions one account at a time. But it's nice to be able to see something that is in balance to be able to record this information. So if you're in practice, of course, we would see these. We would say, well, here's the amount in the receivables and the allowance. I need to make that go to 0, and then I need to basically put the difference into delinquent. Now, there's a few different ways you can do this. I would do this in 2 journal entries. So one way you could think about this is say, okay, these 2 need to go to 0. I'm going to do it one at a time. I'm going to make this one go to 0, and I'm going to put it into the delinquent, right? So this is an asset account, has a debit in it. I need to credit it. So I'm going to copy that. I'm going to skip a line, put it on the bottom in E17, and I'm going to credit it. So I'll right click and paste it 1, 2, 3. It's going to be a credit of whatever's in there, the 327. And then we're going to debit something for the 327, and that's where it's going to go. And where's it going to go? It's going to go into the delinquent receivables, this item. So I could say this is equal to the delinquent receivables. That's where it's going to go. And we can do that one at a time. So now let's post that. So if I go up top to the current, something's in it, double click on it, go to the end of it, plus, and I want to take up the credit here, and that should bring this down to 0, puts us out of balance. Then we're going to post the delinquent side. Here it is, the receivables delinquent, middle column, double click, go to the end of it, plus, and we're going to post the increase on the delinquent, and that'll make it go up here, put us back in balance. Now we also need to remove the allowance for doubtful accounts, so that it also needs to be moved down to the delinquent. This is a credit. We need to do the opposite to make it go to 0, debit it. So I'm going to skip a line. I'll make this another entry. This equals the allowance account, and it's going to be for 141090. We'll credit something, and it's going to go into the allowance account for the delinquent. So there we have it. If we post this, then we're going to post the current allowance. So here's the allowance current. We'll double click on it, go to the end of it, plus, and we want to pick up this 141, making it go down to 0. Then we'll have the delinquent allowance. And so here we have the allowance on the delinquent equals, and here's the 14190, and there we have that side happening. So that's moved it down. Now the next thing we want to focus on, you would think that would be it. We've moved it down to the delinquent, but now we have to deal with that deferred inflows of resources. So this is where this last reversal hopefully will make more sense, because now we're going to record the deferred, or increase the deferred inflows of resources. How does this happen? Remember, this first transaction we recorded on an accrual basis. Basically, we recorded the revenue on an accrual basis. And now we're going to say, hey, some of that revenue wasn't collected, and we're basically going to reverse some of the revenue that wasn't collected. And so we're going to convert kind of more back to a cash basis. In other words, revenue increased on an accrual basis for revenues that we haven't yet received. And now we're going to reverse some of that, decreasing revenue. Kind of weird, doesn't typically happen. Under an accrual accounting, revenue usually only goes up. And that's going to be to put us more closer to basically a cash basis method. So what we're going to do is we're going to say revenue is going to be debited, reversing revenue. Again, this is strange. This is not something we typically do. And that's going to be for the difference between these two items that we just recorded, the amount of the receivables minus the 141 allowance. So that's going to be the 185 910, because of course, again, that's going to be the current receivables that we didn't collect on. So those are the current receivables we didn't collect on that we recorded in revenue, that now we're going to take out of revenue, making us go more towards the cash basis. And then we'll credit that amount, and that's going to go to this, where we're going to put the other side, this account that we just call deferred inflows of resources. So note, we're going to record it as basically a liability. It's going to be in another type of grouping typically when we think of like the accounting equation for government entities, but it'll act as basically a liability when you think about the accounting equation. So assets minus liabilities is going to be the equity. We're going to put that into the liability account. If you think about it, you're going to say, well, that has to happen, right? Because we're going to reverse the revenue. We got to credit something. It's acting in essence basically like a liability here. We're going to be increasing then a liability type of account, or another category, deferred inflow of resources, which is going to be closely related to the liabilities or grouped in that format with regards to the accounting equation for governmental accounting. So there we have that. If we post this out, then we're going to double click. We're going to record the revenue. We'll go to the revenue. I'm going to double click on it, go to the end of it, plus, and then we'll pick up that revenue, decreasing the revenue now. And then the other side is going to go into the deferred inflows of resources. Something's in it, double clicking on that, plus, and it's going to increase that account, liability type acting account, up by the 185 to 910, up to 185 910. Now there's one more transaction we're going to record now, and that's going to be number 4. So notice we kind of, I skipped number 4. So I'm going to make this green. I'm going to renumber these. This is number 1, 2, this is going to be 3. I'm going to call this 3B. And so then we went to number 5. Let's go back to basically number 4 now. So number 5, this could be same 5B, 5C. And now we're going to be taking a look at number 4. We're jumping back in essence to number 4. And it says that we imposed interest and penalties. So now we're saying, okay, we're going to charge interest and penalties on these accounts. We're going to add those to it. So that's going to be, you would think, a form of revenue, right? But of course, we haven't received the revenue yet because we just imposed the interest and penalties. We just basically said, okay, you guys owe us more money now because you were late, and we're going to charge interest and penalties. But on the modified accrual, we can't really record the revenue yet. So in the same sense that we recorded this, or reversed the revenue to deferred inflows of resources, we're just going to record the penalties and interest to that deferred inflow of resources as well. So what we're going to do then is we're going to say interest and penalties. We're going to have a receivable for interest and penalties. So here's the interest and penalties receivable. Notice we don't need a current and a long-term portion because by default, the interest and penalties are past due. So they're all basically past due. That's what caused them. And then the other side is going to be, we're going to have an allowance for it as well. So we'll pick up the allowance for the interest and penalties. And so then the amount that we assessed, so we determined what it would be. So we calculated what they are. We're going to say that it was $15,000. We're expecting to collect $1,350 of it. Therefore, we're going to say the uncollectible is going to be negative. I'm going to put brackets of the 15 minus the 1350. So we think we're not going to collect then the difference of 1,950, and we are going to collect, we think, the 1,350, which would be revenue under an accrual basis. But here we're not going to put it to revenue yet because we're going to be more on a cash basis here. We want to record basically what we're doing, you can see here, is we're trying to be more on a cash basis, yet still record the receivable. So we're trying not to record the revenue before we get cash kind of, but we want to see the receivable. So what we're going to do is say the other side is going to have to go to this other account, which kind of acts like a liability account, but it's its own category. It's going to go up in the same fashion as a liability, and that's going to be the deferred inflows of resources. So if we post this out then, we're going to go to the interest. So we're in K8, something's in it. We'll double click on it, go to the end of it, plus, put the cursor back down, and I'm going to go down to the 15,000. So that increases the receivable. The other side then, we're going to put on the allowance. So right underneath it in the allowance account, in K9, I'm going to say equals. Scroll back down. We'll pick up the 1950. So that increases the allowance. And then the difference isn't going to revenue as it would under an accrual basis, but to this other account. So we're putting it some other place other than the temporary revenue accounts. And that's going to be into this deferred inflows of resources. And that's going to be the credit of the 1350. So we increased that amount, and that puts us back in balance. And again, that transaction is not affecting basically the revenue and expense accounts or the temporary accounts down below. Now here's just a recap. Here's our data. Here's going to be our journal entries. And this is going to be our beginning and ending trial balance. Our beginning trial balance are adjustments, and our ending trial balances